Welcome to our webinar, Finding Cash for Your Dental Practice under the CARES Act, presented on March 27, 2020 by R.C. Thornton Associates. If you would like to sponsor one of these webinars at no cost for your colleagues or with your trade association, please call our office for details or send an email to info@rcthornton.com. It is free, and we would love to work with you on your specific topic of interest for your business. It is my pleasure to introduce you to our speaker, Chuck Thornton of R.C. Thornton and Associates, CPAs. Chuck works extensively in the tax area. He is an author, lecturer, and frequent webinar presenter. His firm's mission is to help clients achieve financial success, and that means saving taxes. Chuck's background includes being a CPA, personal financial specialist, charter life underwriter, and certified financial planner. He is a graduate of New York University with a master's in taxation. Don't hold this against him, but he did work for the IRS a long time ago. He is also owner of R.C. Thornton Financial Solutions, LLC, another CPA entity specializing in investment planning. Chuck works with numerous dental practitioners throughout Arizona. Welcome, Chuck Thornton.
Well, thank you, Kit. I appreciate that. And I'm trying to, here we go. We're going to be talking about this new rule. It's called the Employer Protection Act, or Employee Protection Act. I'm sorry. This one is for dentists. I'm going to talk about how you can basically get some good cash and how you can also get it forgiven at the same time, the indebtedness. This is something that's been talked about for quite some time. It's gone on and off, but it seems like the law is passing. As of the time we wrote this, it had been passed by the Senate as of March 26th, expected to be passed by the House March 27th, and right before we just started going this recording, I had a bing that came through on my text, and it turns out that the House has passed it. So the procedural delay issue is not even relevant at this point. I suspect Trump will probably sign it today on Friday, or I can't imagine he's going to wait until Monday. So I'm guessing this thing will be finalized. So we're going to talk about several programs that are out there, ones that should work very nicely for dentists, because you guys have been basically locked out of your practices for almost 2 weeks. And so therefore you definitely have a cash flow issue, and you can fit very squarely within this program. So let me start with what's called the PPP, Paycheck Protection Program. Don't confuse it with a payroll provider. It has nothing to do with them at all. This is a small business administration loan under the long existing program known as the 7A program. It is not an economic injury disaster loan. We'll call it EIDL, which has been available online through the SBA for probably a couple of weeks. I've had already some people start applying for it. They've asked me about it. The PPP is the one that just passed. It is superior to the EIDL, so therefore you might want to consider switching over to emphasizing the PPP loan. However, if you already done the EIDL, the economic disaster loan, you can switch it over to the PPP. I'll just tell you one quick reason why this is better. The PPP, loan forgiveness, no personal guarantees, no collateral. The EIDL requires all the above except collateral if it's under $25,000. Enough said. The SBA is obviously superior. Okay, there are a couple of key takeaways. First of all, we're going to talk about PPP almost exclusively from now on. I know this is quick. I know that you will not grasp it all. I just want to show you that it's there, tell you where to go get it, and then also to show you it's a little bit of complication to it. There's what's called a cover period, February 15th, 2020 through June 30th, 2020. You'll see that coming up a little bit more later on. Just remember, cover period is February 2020 to June 20th, 2020. It's a low interest loan, not more than 4%, and it can cover certain expenses such as rent, payroll, employee health insurance benefits, paid leave under the Family Act. We have a prior seminar recording on this, which will be up on our website here shortly also. Okay, it's guaranteed by the SBA. There's no personal guarantee. There's no collateral required. All the lender and borrower fees are waived. There's no prepayment penalties. The amounts can be deferred payments from 6 months to 1 year and can have a maturity of 10 years. Quite a deal. Anyone who's done SBA before knows there's all sorts of different guarantees and there's fees and things like that. This does not have that. Okay, also too, another key takeaway is it's a partially forgivable loan with the application for forgiveness filed with the lender after a certain period of time. It is a feature intended to provide strong incentive for you to retain your employees, and it's also a great way for you to keep your footprint of existing in the community. You don't want to have to let all your employees go. Then when the economy gets better, you go back and have to start rehiring, retraining because perhaps they've gone somewhere else. It's effectively a partial revenue program to allow businesses to hibernate through the period of severe disruption without changing their employee structure. The program is generous and there's a low barrier to entry. You don't even have to show economic harm. You don't have to go in and say, well, let me prove how my practice has decreased. All you have is a good faith certification that the current economic conditions necessitate the loan and the funds will be used to maintain payroll and certain expenses. They can either pay the employees on unemployment or they can pay you to keep your employees on the payroll is what it boils down to. Is the forgiveness of any of this debt taxable? Actually, no. Typically, forgiveness of indebtedness is taxable, so this is another great benefit. When the time comes that some of this gets forgiven, it's not going to be taxable, even though you were able to expense the expenses that you used by paying for them with this loan. Now, who's the lenders? This is one, unlike the EIDL, where you apply for it directly through the SBA online. This one, you need to go to a financial institution, SBA approved lenders. A lot of banks have in-house people who have already been pre-qualified to basically take SBA loan applications and basically get them approved. That was referred to as the 7A program. I have some experience with that area, but you have to go find a bank that has the SBA approved lenders for a 7A program. The Treasury could come out and have other lenders, but they're not out yet right now. And it means that the SBA programs are also processed by the banks. This makes it easier than going online. And again, not necessary to go directly to the SBA as required with the EIDL. Eligibility, in businesses with less than 500 employees, that means just about every dental practice is going to qualify for this unless you happen to just be some national practice. How much can you borrow? I'm going to give you some formulas, but I think the thing you want to walk away with is there's some calculations and there's accounting to be done on this whole thing. So you want to make sure that whoever you're dealing with from the accountant side understands how this program works. Okay, how much can you borrow? The maximum is the lesser of 10 million or a calculated amount. I don't think any dental practitioners could do 10 million, but if you happen to be a manufacturing company, maybe something in there might be applicable for you. What it does is it takes 2.5 times the average monthly payroll based on the last 12-month period. So you apply today, you go back 12 months, and you say, well, with my average monthly payroll, you come up with that number, you multiply 2.5. The payroll costs include defined as wages, salaries, retirement contributions, healthcare, covered leave, and other types of expenses. It excludes payroll to yourself and excludes amounts paid to employees which exceed $100,000. You can see how for a dental practice with an array of employees, this can fit pretty nicely. Now, the loan forgiveness part comes in that basically the amounts of the costs incurred made during an 8-week period beginning on the date of the origination. So what happens is the loan is granted, it's called originated, and then the theme is they want you to continue to employ your people. So they say, first of all, take the costs you incurred and the payments you made during this 8-week period, and then payments of interest and loans that were in place before, 215.20, rent and utilities. So what they're saying is, so how did you keep your business operations in place? Now, there's a reduction in the business and it's reduced by basically the number of employees that have been reduced during a certain period. So my first calculation was, what were all these expenses during 8 weeks after the loan was originated? And it's based on a concept called equivalent full-time employees. So if you have part-time, you have the average amount. We'll get you the calculations. I want you to just get the flavor on this. That's all you need to do, because I want to convince you this is a wonderful deal and you ought to start hopping on this thing right now. Okay, if you're curious in the formula, it takes the eligible cost times, and you take a numerator, which is the average full-time employees during the month of the covered period. Remember that covered period, February 15th to, I believe it was June 30th during the covered period, divide by the full-time employees equivalent between February 15, 2019 and June 30th, 2019. That's your forgiveness amount, by the way. That is one approach. Don't worry about how to calculate it, but you can see they're comparing the employees you had during this covered period compared to what you historically have to verify indeed you have been able to keep a certain number of employees. There's also an alternative. It's the same numerator, employees during the month, divided by the full-time equivalent employees from January 2020 to February 29th, which is before this stuff really started kicking in. So you get a choice, and you can see there's a calculation to be done, which means once you apply for this loan, then you need to be prepared to submit these calculations to the bank so they can hopefully process the forgiveness of indebtedness. There is also a further reduction in employees retained compared to the prior year, and there's some flexibility for rehire laid off employees. Again, I'm not going to get into the calculations, but the theme of it is if you can keep your workforce intact for a period of time, you may be able to get a lot of these expenses forgiven. We'll talk about some tricks and traps in applying for this. We've been watching this probably over a month. I probably last night, for instance, I was up all night putting these slides together. We've been watching it, waiting for it firming up. We've been talking with banks about the particular issues. And we said once the law passes, you're going to need to wait for the SBA to issue pertinent regulations. That could take weeks. I don't know. In the meantime, you want to check to see if your lender has an approved SBA lender in-house. If they don't, then you might as well start moving on looking for a different bank. So that has an approved SBA lender. They're not supposed to do this, but don't be surprised if they say we can't get to you unless you're a customer right now. And so you want to check your current bank to see if they're approved as an SBA lender. If they're not, though, you might as well start looking for one right now. And I'm going to suggest to you, don't be surprised if when you talk with your commercial loan officer, they may be fuzzy on this, and if you talk with the SBA approved lender, they may think you're talking about the economic disaster loan that we talked about, which is not the good one. I found as little as 2 days ago, as I sampled through bankers, almost no one knew about this thing. They had to go to their SBA departments. Don't think that basically everyone you talk to will necessarily know this at the bank. There is a limited experience in checking with the banks. As I just mentioned this, I did a Google search on this several days ago. I want to see what banks were advertising this program. I found one in Amarillo, Texas. Again, that's how I think a lot of these banks are not too prepared for it. Doesn't mean they won't be. It just means you may have a time lag. You need to be assertive but professional. Someone may say, we don't know about this, and send them these slides. You're welcome to do that. Insist on talking to the SBA lender within the bank. They're starting to know this. Some of the bankers have been talking with over the last week or so. Some of them starting to call them back and say, well, we're ready for this. So again, this is a fluid situation. It's changing, but check your bank first, SBA lender. Number two is that are they getting geared up for this? And then the question of it is, how can you get an application? Now, there's a cap of 349, we'll say 350 billion for this program nationwide, and it's a first come, first serve. That looks like a big number. You're certainly not going to get that. But if you drag your feet on this and you start letting yourself get a couple months down the road, they could be running out of the allotments. So it is a safe assumption that as this program gets known and implemented, there's going to be an avalanche of people who are going to be applying. Expect delays. I think loan requesters may find funds could be gone if you delay too long. Here's a strategy. If you're with a bank, they have an SBA program. You could say, could I apply for a 7A SBA program that's been around for years and then convert it over to this Paycheck Protection Act loan, just to kind of get yourself in a queue. If it is only the Paycheck Protection Program under the CARES Act, it's not the other loan that we're talking about that's online. So again, I would try to get in there and get your application started as quickly as possible. Not only are you trying to avoid limitations on this might happen, is you're trying to get front in the queue so they can be processing this stuff for you. What information are they going to need? Who knows? To tell you the truth, I'm just guessing. They'll probably want your prior 3 years returns. They may want past returns. They may want payroll returns. They may want financial statements. They may want a list of the entities that you own. They may want your calculation of allowable expenses. Again, this is where your accountant can help you go in and start calculating the allowable expenses. Even as you're doing the application, you might as well start getting this. And then you might start doing a calculation of what you need to get maximum forgiveness. Now, you don't need to know how much forgiveness you're going for, because your worst case scenario is you get a loan that's non-secured, don't have to personally guarantee it, and nothing gets forgiven. Well, it's still better than any other loan arrangement because at least there's no recourse to you. So that shouldn't stop you not knowing what's going to be forgiven from going for the loan. But it would be nice for you to start strategizing with your accountant as to which is the better formulas to use and any strategies on how you might hire and rehire people. Are there other programs and law changes that can help secure cash flow? Now, I'm just going to whet the appetite here because we have many, many more seminars coming up on this, on other ways to get cash from different sources. So far, we've done a webinar on our website, which is about the uh, delay of paying your taxes until July 15th. There's opportunities there. We've done one on the Family Leave Act. We've talked about that. We're doing this one right now, and then we'll be coming up with other ones around the corner. We just wanted to focus on this particular loan. The disaster loan we talked about, but doesn't have the partial forgiveness. There may be up to a $10,000 grant, though. If you start at the process and you switch it over, there is a provision for a $10,000 grant, of which I really have no information on at this point. I'm just seeing it in the literature, might be there. There's a waiver of penalties on early distributions from your 401k and IRAs. Again, I'm just giving you a little taste of what's coming up. There's a 50% credit on $10,000 of continued wages paid to certain employees that are furloughed. However, how you take those credits and stuff is something we talked about in our prior webinar. There's some conflict with the IRS how to do that, but I can tell you this, if you take the credit, you can't get the loan. So each of these provisions in themselves are not so complicated. It's the interweaving of how they apply. So I would not want to be so excited about taking a credit that can knock you out of getting a PPP loan. Again, you need to sit down with the accountant and make sure they know what's going on here and be thinking through what your personal strategy is going to be to maximize your cash flow, whether it be for the PPP, whether it be the economic disaster loan, or whether it be through other tax credit techniques, or even tapping into retirement plans. There's going to be some ability to delay payroll tax payments. I talked about the grant. There's going to be some restoration of lost carrybacks for 5 years, rules about investment in qualified improvement properties, and then there's also, if you already have SBA loans, there's ability to get the SBA to pay those loan payments for the next 6 months. Quick, because I'm trying to stay focused on just this PPP program. But we'll be talking about a lot of these other techniques with the next round of seminars that we do as quickly as possible. I just want to have you primed that there's more going on, but this is the big one. Okay, we're going to have future seminars. You bet we are. There's some already posted. And you go to our Speakers Bureau series. We have new ones we'll be doing. If you're on our mailing list, we will automatically send those recordings to you. Now, we add new listeners to mailing list, and we use it only for the purposes to inform you for future seminars. If you are a dentist, why not forward this to some of your colleagues? They can listen to it, and then what they can do is they can listen to it and they can go see their accountant if they want to. And they do have to register. And by registering, they put their name and their email in. We use that for future mailings. They probably would be interested in the others, but I can assure you, we don't call them up, we don't solicit them, we don't do anything other than invite them to future seminars. Okay, if you have additional questions, let me talk about some bank sources for you, by the way. We now have one confirmed banker that says they are up and ready and raring to go on this thing. They were not too excited about me just giving out their name carte blanche. But if you will give me a call or send me an email here, I can give you the name of that one. We have another one that we're talking to right now, but don't overlook checking with your own place first. It's just that I have a few sources that I might have been able to cut out all these discussions for you. And as we get more and more, we'll let you know who these are. Okay, I think that's it for this presentation. Our questions and answers, we did not have it as we traditionally do it. I'm going to turn this back over to Kit, who is going to get this out to people and watch for the newer seminars that will be coming up shortly. Kit, it's all yours.
Hey, great. Thank you, Chuck, for this informative presentation, and thanks to everyone watching the recording. I do want to mention, if you would like to sponsor or collaborate on a webinar with Chuck, please call our office for details at 602-678-7067. It is free, and we would love to work with you. Thank you all, and have a great day.